SPX jumped plus 0.6%, as inflation won't cause Fed to be as hawkish as markets are pricing. Neuberger Berman's Blazek lifted semiconductors and consumer discretionary. Welcome to your daily market briefing for 2026-04-09. Broad risk tone was firm, with SPX at plus 0.62% and NDX at plus 0.72%. Relative strength stayed with XLY, XLI, while IGV, XLE lagged the board. Here is the broad market snapshot. S&P 500, up 0.62%. NASDAQ 100, up 0.72%. Dow Jones, up 0.58%. Next, the ETF curve set shows where relative strength and weakness developed through the session. Leaders were consumer discretionary, plus 1.73%, industrials plus 1.03%. Laggards were software, minus 3.90%, energy, minus 1.24%. Across global markets, the session leaned constructive globally, with most major regions holding up. Asia was under the most pressure, with Japan and Shanghai leading the retreat, while Australia and Oceania held up better than the rest. Stepping back, broad risk tone was firm, with SPX at plus 0.62% and NDX at plus 0.72%. Relative strength stayed with XLY, XLI, while IGV, XLE lagged the board. The stock market Fear and Greed Index is 25, which sits in fear. That points to a cautious tape where traders still want confirmation before adding risk. On the S&P 500 heat map, leaders were semiconductors, plus 2.22%, consumer discretionary, plus 1.73%. Laggards were software, minus 3.90%, energy, minus 1.24%. The market is still trading through the Fed lens, with investors using data points such as upcoming macro releases to refine expectations for the next policy move. If the incoming data runs hot, rate cut hopes could be pushed back and pressure duration-sensitive sectors. Commodity action was split. Crude oil led, while natural gas lagged, so the move looks selective rather than broad-based. The index board leaned higher, with Dow carrying the weakest tone and Nikkei holding up best. Mega cap curves were mostly positive, which points to a broad tone move more than a single name story. Forex showed a risk-off currency tone, with the sharpest move in AUD/USD and the best relative strength in USD/JPY. Crypto remained constructive, which helps confirm the broader market risk tone. Bond curves suggest yields were mostly rising, so rates still mattered for the session. The main focus stayed concentrated in semiconductors and consumer discretionary. The pressure point remained software and energy. For tomorrow, watch the next macro events, the direction of Treasury yields, and whether leadership stays with semiconductors and energy or rotates elsewhere. Also watch follow-through on inflation won't cause Fed to be as hawkish as markets are pricing. Neuberger Berman's Blazek, CNBC, because headline risk can quickly reshape sentiment. That is the key takeaway for today's market. Broad risk tone was firm, with SPX at plus 0.62% and NDX at plus 0.72%. Relative strength stayed with XLY, XLI, while IGV and XLE lagged the board. Keep watching policy signals, index leadership, and the next macro catalysts. Subscribe for the next daily market briefing.